What is up everybody, Gifford here, and today's video is all about how much dividends I got paid for the month of June 2024. And last month was the biggest payment that I've ever gotten since I started dividend investing in 2023. If you stick till the end, I'll also talk about why dividend investing might not always be great for everyone. In June, I got 11 dividend payments for a total of $16.39, and the running total for the year is at the bottom at $56.07 USD, and the account size is about $11,800, but that's in New Zealand dollars. So the first stock and payment is VYM right at the top here, which is my biggest dividend, and it paid me $5.08. I've also got the ticker symbols over here on the left hand side so you can follow along, and across here is the month of June, and you can see all the dividend payments that I got and the tally. So in VYM I got 8.13 shares, and it's currently up by 8.51%. So here is the 1 year chart, and you can see the red dots there is where I've slowly been buying over time. So I keep buying weekly. It's a huge ETF, so there's no need for me to time the market. It pretty much goes up, and I'll let the market do the work and continue to get the payments. As you can see here, I took a bit of a break from buying, but what I should have really been doing is buying and sticking to my consistent strategy, because I missed out on all the gains all the way over here. All I can do now is to continue this on and keep buying and learn from my mistakes. My second dividend payment is Devo, and that paid me $1.71. With Devo I got 16.7 shares, and it's currently up by 9.04%. Devo is a monthly payer, so you'll always hear me talk about them each update. Devo pays me a really good dividend of 4.57%, and again it's an ETF, so it's just a weekly buy for me, and so there's no need to time the market. The third stock is GP, and that paid me $2.80. This is another monthly dividend payer and an ETF. With Sharesies I have an auto buy each week for the ETF, so it's super simple. With GP I have 11.6 shares, and it's currently up by 5.12%. And you can see there I've sort of stopped buying them for the moment because I'm actually overcapped in the fund itself, so I have to wait again till my other funds catch up and how much I bought into them before I can start buying into this one, if that makes sense. The fourth payment I got is VT, which is Vanguard Total World Fund, and that paid me $2.94. I've got 8.4 shares of VT, and also it's currently at 11.23%. So VT is a world total fund, and it's a quarterly payer. It has a small dividend yield of 1.92%. However, I have this as safety for the account to keep it stable. Again, I buy weekly. It's a good ETF, so there's no need for me to time the market. If you had to invest in one stock for your life, I would recommend this one, but that's not financial advice. So the fifth dividend payment that I got is DGRW, which is an iShares Core Dividend Growth ETF, and that paid me $1.21. I've got 6.2 shares in it, and it's currently up by 10.18%. So this fund pays a dividend yield of 2.36%. So this ETF pays quarterly, and I have this in my portfolio as this is run by a professional company picking dividend growth stocks. Basically, this is a good fund to measure how my own investing strategy is going. Another thing that I'm not sure about is why I've gotten this payment is early, as you can see that I only recently got paid in April. So this one is being fairly quick, but anyway, I'll take it, and that's fine. And you can see the dividend payments have been increasing since I bought this last year. The sixth payment is DGRW, which is very similar, and this is a Wisdom Tree US Quality Dividend ETF, and this paid me only 21 cents. And as you can see there, I've got 4.6 shares in this, and it's currently up by 16.45%, so the performance has been pretty good capital wise. And here you can see under stats the dividend yield is pretty low at 1.59%, although I don't mind that because the capital growth has been pretty good. And if you're wondering why I'm buying this fund, it's from a Reddit recommendation, so I decided to buy it and see how it performs, and it's been going pretty well. My seventh dividend payment is from Microsoft, and that paid me 58 cents. As you can see there, I've only got 1.15 shares in Microsoft, and it's up currently at 34%. Microsoft pays a very low dividend yield at 0.64%, but that's okay because the capital gains in this has been really high. As you can see there, my buys are pretty sporadic. I don't buy this all the time because it is only a small percentage in my portfolio, and I like to keep individual equities lower. So I do have these individual packs just because of the capital growth, and if the company is trading what I think is trading in a good value range, I will pick up some here and there. But I've also got to stick to target weights in there, which means individual companies have to be lower than my funds. So speeding this up a bit, the eighth payment that I got is Google, and they only paid me 21 cents. As you can see, I've got 1.5 shares of Google, and that's currently up by 11.53%. And Google is a relatively new addition to my portfolio. You see in the last year, it's only been this part here, I think it's in the last year. So even in the last 3 months, I've only been buying a small amount of it, and I'm not going to be buying any more because it's an individual equity, so therefore I've got to stick to the weights that I've given it, and Google is a fairly low weight, although I do like the company. My ninth payment is Realty Income Corp, and that paid me 71 cents. I've got 4 shares, and that's currently up by 1.2%. Realty Income Corp pays a good dividend at 5.94%, but I've reduced my holdings in Realty Income because I don't really trust the company at the moment. You can see here its track record in the 5 years hasn't actually gone up very much, although that's a nice dividend. The company is having some issues because it is a REIT, and REITs have been having a hard time lately, so I've actually reduced my exposure to this when it came back to my average. I'm not going to be buying any more and just kind of seeing how it goes. This might be one of the funds that I do take off my portfolio, but we'll see how that goes in the future. My 10th payment that I got is Visa, and that that paid me 31 cents, and you can see here I've got just under 1 share of it, and it's only up at 3%. So Visa pays a very small dividend of only 0.78%, and my buys again are very casual at this. If we go into here and go to dividends, we can see here that I don't really get much from Visa, but I do like to build this position up when my overall portfolio is actually going up as well. The last and 11th payment is McDonald's, and I got 63 cents for that. We can see here I've got 0.64% of shares, and it's currently minus at 9%, and this is my worst performing stock in my whole portfolio. And McDonald's pays an average dividend at 2.7%, and if we go here and have a look at the previous dividends, you can see here that it's actually been increasing in the last year for me, so still a small holding though. So just a summary, my dividend payments for June 2024 has been $16.39 all up, and this is in the Sharesies dividend portfolio. So the main reason for this portfolio, even though it hasn't performed that great, which is currently at about 3% in the positive, it is an income portfolio, which means I use the dividends and I use it to pay with the real stuff. In this case, while it's only a small amount, when it does build up a bit, because it's up to 50 something dollars plus, I do get the money out and actually spend it. So the good thing is that I get regular income coming in. However, the returns have been okay as compared to a term deposit, but the real use for this strategy is to actually use the money and the income that I get from it. So when I put more money in, I'm going to be getting income, and I'm going to be using that money to put elsewhere to buy stocks, but actually buying real stuff with it in real life, like food or something like that. And for the people asking, this is only one of my portfolios. It's really good to understand what you're investing for and what way is the best strategy for you, whether it's just a straight buy and hold, or for your retirement, you're going to keep buying for 20 years or so, then obviously the strategy is not going to be a strategy for you, as this is an income strategy. So understanding the differences between the portfolios, you're going to go a really long way in doing that. Thank you very much for watching, and if you watched the end video, that's all about how I show you how you can grow your dividends from only 23 cents to paying you $100 a week. So click on that video if you're interested. If you have any questions, feel free to pop them down below. Also, I have my referral codes, so check those out as well. They'll be in the link in the description. The trading platform I use is Interactive Brokers, Hatch Invest, Stake, and Sharesies for individual companies, and I use Investnow for index funds. If you want to start investing, you can use any of my referral codes down below to start your own investing journey if you are from New Zealand. If you want to hear more from me, you can hop over into Instagram. I do some posts there on market commentary, what I'm doing, showing my portfolio, showing my totals in there as well, so feel free to follow. So hit like and subscribe if you're interested in videos from someone who is investing from New Zealand. Thank you for watching, and I'll see you on the next one. Goodbye.